Hi everybody, welcome. It's Russell Markham here. It's just gone 11 o'clock Sydney time equivalent, and just making sure everything's working here on the camera. It looks like everything's coming through loud and clear. Let me know in the chat box if you can't hear me or having any issues with the sound. I suppose you wouldn't be able to hear me, but no doubt there'll be something in the chat box. Looks like everything's working. So without further ado, let's get up the slide set here and we'll get going. Here we are. So travel and tourism stocks. I'm just going to move over my camera here, so bear with me. Here we are. It's technology there. Amazing what you can do now with all the different screens and technology. Travel and tourism stocks breaking out. And before we get going, let's just quickly go through the disclaimer statement here. Hopefully my microphone's nice and clear. So disclaimer statement there. Please note our financial services licenses there. You can read up more per us on our webpage as well, also within the VectorVest software. I've got the microphone right here in front of me, so I'm sorry if you can hear my keys moving or my mouse clicking, but certainly gives me the freedom to move around and talk to you more easily. All right, so disclaimer statement here. Please note general advice only. I cannot give personal advice today. Past performance not a guarantee of future results. Any forecasts or backtests that we cover today, please note there. It is intended as guide only, and those actual results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. Okay, so with that said, let's jump out of here for now. And what I'm going to do here is I'm going to set the scene to begin with. I want to set the scene here, and I'm going to bring up a web page here. So this is our YouTube channel. So VectorVest, I typed in VectorVest. If you type in VectorVest Australia, you can find us on YouTube. We also have VectorVest Incorporated, our US main head office there. And you'll see we've got tens of thousands of followers. Like us here in Australia, it's quite a new channel and we're growing. We're up to 861 and climbing. We've got just over 100 videos on there now too, so please do click the like button, follow, subscribe to us. What I want to show here is on the playlists, or certainly in the past, on the live, actually if I click on the live playlists here, we're going live, of course, with travel and tourism, but you'll see just a couple of months ago, 11 months ago, and we spoke about travel and tourism stocks, let the international borders flow once again, and we brought up some statistics where we saw a massive drop-off in the amount of tourism taking place, and we said get ready because at some point things are going to rebound, and rebound they have. So here we are today talking on now about travel and tourism stocks breaking out. All right, so let's close out of here and let's get into it. So in the VectorVest system, if you trial out the system for $9.95 for 30 days, what you want to do is you want to click on the viewers tab. Once you're in the viewers tab, you go to watch lists. And in a group, a folder called Overview Watch Lists, we have this one here called Travel Stocks, and we've also got Travel and Tourism. Today I'm going to pick on Travel and Tourism. Why not? Let's look at both the travel related as well as the tourism related in combination with our talk, because we're talking about travel and tourism. You can see at the moment here we track currently 22 travel and tourism stocks, and they're very well received, of course, because the market is now turning, and a lot of our subscribers are looking closely at these stocks as they're starting to turn. So I'm going to go through the first couple of stocks here. What we do each and every day in VectorVest is we rank and we sort all these stocks with the best combination of fundamentals and technicals at the top, and all the worst ones down here at the bottom. And we do it using this wonderful tool here called VST. It stands for Value, Safety and Timing. All right, so our fundamental indicator there and technical indicator looking at value, safety and timing. VST combines both fundamentals, our VRS fundamentals, and our technical indicator. They're all on a scale of 0 to 2, and the master indicator here is also on a scale of 0 to 2. So above 1, and the higher above 1 the better, and below 1 we want to be careful. Now we're talking about travel and tourism stocks breaking out. So what do we mean by that? And let's drill in and have a closer look. So starting off with the best fundamental and technical stocks, you can see all these stocks here are currently buy rated. It doesn't mean you rush out and buy them. It just means it meets some strict criteria to get a buy rating. All right, so it warrants further investigation. So if I highlight the first few here and graph them, let's have a look. All right, so I'm going to go nice and slowly here to begin with. So looking at Qantas here, we can see Qantas here. This is a 12-month leading forecast on earnings. All right, so this is a 12-month leading forecast on earnings. Look how the earnings have started to really turn around. So June, July, August, bang, up it comes, and starts breaking up. Up goes the share price in combination with the rising earnings. The share price, the earnings is just sort of flatlining a bit, sort of coming off slightly. Share price is still going. It's a strong share. All right, it's got a lot going for it. We value it currently at $9.37. So it's undervalued with a great set of rising earnings. We have this technical indicator on a scale of 0 to 2. So here it breaks above 1, around about here. The technicals break above 1, and apart from 1 or 2 days where it dipped below 1, it's been holding steadily above 1 since. The price has gone from $4.50 odd to over $6.70 currently. All right, so a great looking stock. Why is Qantas benefiting from this? You know, from the travel turnaround? Well, there's more arrivals, right? More international visitors, more domestic flights, more business flights. So here's COVID, big sell down, a lot of pressure on the earnings. COVID restrictions start lifting, things start returning back to normal. Up come the earnings, up comes the share price again. So what I've done for today's short presentation here too, I just want to bring up, let's see if I can bring up some further statistics to share with you. All right, so Australian tourism to bounce back this year. Media release, 16 December 2022. Senator, the Honorary Don Farrell noted there. Australia's visitor economy is forecast to bounce back to pre-pandemic expenditure this year, so 23, and grow to $227 billion by 27, according to new forecasts out today. In the very welcome news for the sector, this year's annual tourism forecast for Australia projects a brighter future for the visitor economy from now until 2027. International tourism will continue its recovery, with international visit expenditure to exceed pre-pandemic levels in 24 and visitor arrivals to top pre-pandemic arrivals by 2025. So you can see that a lot of these companies are going to benefit from it, and Qantas being one of them. So that sets part of the scene, right? Let's have a look. What else have I got to share with you today? So here's another report that's come out here. Let's see if I can zoom it in a tad. Let's just move it across. But this was, it might be a wee bit hard to see on your screen there, but effectively this graph here did a snapshot around the world, and it looked at where visitor arrivals and expenditure, what was taking place. And you can see here, these are all the arrivals versus expenditure. This was for 2021. So don't get too sort of caught up in all the numbers. The key takeaway here is that travel was down about 98 to 99% across just about every region that we track historically back in 2021. So the industry was effectively decimated. And as such, there was only upside potentially because it really couldn't get much worse. And you can see, so for example, Hong Kong was down 98% on expenditure, 99% on arrivals. Indonesia, same deal. Malaysia, Singapore, India, France, USA. The industry got absolutely decimated. So with that said, the only way was up. And let's see, another one here from Statista, is it pronounced that correctly? They do some pretty amazing statistics. And you can see here, number of visitors in millions. So 2010, there was 5.27 visitors coming to Australia for tourism, and it spiked all the way up in 2019 at 8.6 million. So that was a phenomenal set of arrivals. And then COVID started to hit, and it dropped all the way down to 6.2, and then it dropped down to 0.14 million. And in 2022, it only partially recovered at 1.11. All right, so based on all the research coming out, by 25 we expect numbers to be back above pre-pandemic levels. So 23 will be, of course, a much higher number than the 1.11 million arrivals for 2022. So with that said, a lot of upside. There's a lot of upside in the making. Okay, So now we get to VectorVest, and we go to VectorVest and we say, well, of those tourism stocks, which ones are going to benefit the most, right? Which are going to be the ones that are going to benefit the most? So we've looked at Qantas, seeing a big uplift, turnaround in the earnings. Good. All right, let's keep going. Corporate travel. Interesting. There's COVID, big drop in the earnings. The earnings start turning around. Corporate travel's been a bit sluggish to turn around as the earnings have started to pick up. But in recent weeks, you can see here, earnings continue to power on, and we're now starting to see the share price get going. So it's gone from $15 back at the start of January to now 19. So it's taken a wee while. Technicals are holding up. It's starting to fire up. What I've done in terms of the statistics there, I went and had a look at corporate travel, some of their latest announcements. So let's see, what do we got here in terms of corporate travel? Here we are. So here's corporate travel, one of the most recent reports. And you see over here, it's interesting when you zoom in and look at all the reports here. Underlying EBITDA, earnings before interest, tax, depreciation, amortization. It's a way of calculating a type of profit calculation, or at least on the earnings. It's not a net profit. It's an earnings adjusted for depreciation, amortization, etc. But you can see here up 182%. All right, and as you scroll down a bit more here, you'll see revenue and other income, up 79% from last year or last quarter. What was interesting on their latest report too is if I drill in here, you can see the projections. So here we are here, and then there's projections growing more and more. So you can see big turnarounds in the projections by a lot of these companies. Let's see here, and we'll have a look at the other one shortly. Here's Webjet. So let's before we look at Webjet, so there's corporate travel. So we're expecting a big uplift in earnings to continue based on the reports put out to the media there, and we're certainly seeing it in the earnings. We've got another indicator at VectorVest called GRT, earnings growth rate. This is what a company is looking to grow its earnings by. Nothing to sneeze at, 35%. Don't let the graph fool you. 35% is still a very, very strong number. So corporate travel right now is on track to grow its earnings by 30-odd%. So that's the earnings, a 12-month leading forecast in earnings. If those earnings grow another 30-odd% in the next 12 months, then no doubt you'd expect the share price to lift up. But of course, you need to log into VectorVest each day and double check, keep an eye on those 12-month leading forecast earnings. Webjet, right? So another massive uplift in the share price here. Look at the earnings. So the earnings sort of start tracking up here. It takes a bit of a disconnect. The share price was in limbo, and then all of a sudden it's like investors woke up to the fact that the earnings were awakening. Maybe there was a bit of trepidation to get in because of what had happened, and then all of a sudden, whoosh, up goes the share price along with those powerful earnings. Technicals have held steady, showing the momentum. And look at the growth rate. Growth rate just keeps tracking higher and higher. They're currently on track to grow their earnings by a whopping 39%. Phenomenal. So based on that, and again, some of the latest reports put out there by corporate travel, and let's see here. Is there a way to zoom it in? But anyway, I'd like to probably get rid of the left reader bar there, just make it easier for you to see, but hopefully you can see this. I'll zoom it in a bit more, but let's see here. So you can see transaction values are up. Let's see here. Result, all the earnings here. Yeah, look at that. Leisure up 44%. EBITDA 19% above the midpoint on the initial first half target. Almost a $280 million turnaround from the 22 fiscal year. All right, so again, I'm not going to drill into the micro details. It's there on the ASX website should you choose to look at it. But again, you see the underlying fact flowing through that earnings are turning around. They're starting to turn things around as the pandemic comes to an end. So we're seeing it here. There it is, share price. There's those rising set earnings. Technicals are holding up, looking to grow its earnings nice and strong there. The other thing I wanted to show you is sales. Sales is what's going to ultimately drive a company up as well. There's no point having a great net profit margin or whatever have you, unless you're growing your sales. So here you can see this is sales in millions. Sales are coming up, the earnings are coming up, and the earnings growth rate is coming up as well. And we're seeing this taking place here at the moment. All right, scroll to the next one here. Hello world, not quite sort of seeing it. Not as strong as the other ones that I've seen here. Definitely a turnaround here in the earnings, so that's good. You can see that's going from negative into positive territory. So up it goes, $1.40 to $2.25. Very, very nice. Look at the growth rate, earnings growth rate. It's come from, where was it? 18% back in September of 22. It's now all the way up to 27%. They're looking to grow their earnings, but I'm not quite seeing the explosive uplift in earnings as to what I'm seeing it on Webjet, for example. But this might be early on in the piece yet. All right, a little bit of volatility over time as well, so not quite as strong, but certainly right now, yes, that trend is strong, but not historically. Flight Centre, another very interesting one here to look at. Flight Centre, and again, really starting to turn things around. Growth rate at a whopping, what's this one here? 40-odd%. Earnings going from negative, coming back up into positive territory. All right, so really starting to, that's the early onset of the turnaround, and sales picking up here as well. So again, that's what we like to see, and we'll keep an eye on that. So there are some of the top ones there that are starting to benefit from the turnaround taking place. So what I want to do here is I want to put these into a watch list. Let's go ahead and pick on some of the best stocks there and put them into a watch list and refine them further. So what I'm going to do here is I'm going to grab all those top stocks, right? So I'll grab all the buy rated ones to begin with. All right. Before I put all these into watch list, there is one other that caught my eye. EVT. All right, EVT Limited. Interesting stock. Because if I look at this one here, I look at it historically, doesn't look that happy, right? I mean, yes, it went up very nicely, but from here it was really in a strong downtrend, and it's continued to remain in a pretty strong downtrend. So you'd be forgiven for saying, well, it's probably not one I'm going to look at right now. But look more closely. Look at the earnings. Those earnings are textbook in terms of the rising earnings there. Up they come. Very, very nice. Look at the growth rate. The growth rate is just bubbling along. Phenomenal. 38%. Continues to hold strong. And sales continue to rocket up. Right? It's undervalued. We valued it at $15 odd. It's $12 odd. What gives? Why is this not turning around at this point? So I got to investigating a bit more, and just to double check. So EVT, here we go, and let's see if I zoom this in a bit. Scroll it down a tad, and you can see here revenue up 58%. Strong balance sheet, net debt $219.8 million below COVID-19 levels. So the debt's down. What else we got here? Entertainment is up. EBITDA up 1,266.4%. There's a lot to like here in terms of earnings going up, earnings going in the right direction. So you can see here, entertainment, up. That's in thousands, 21,696,000. So what's that? Is that 21 million? Up 21 odd mil. Keep coming down here. Let's have a look, scroll down a bit more. Normalized EBITDA, again, you can see, so this is 22, 107, 715 to 43, 661. So that was the normalized EBITDA. Normalized profit, let's see here. So it's gone from 20, this is probably the key one, to 68. So, it's up a whopping 47 mil, if I'm reading this correctly. And again, you can hop onto the ASX and have a look, but there's plenty of upside taking place on this one here. It's, look at that EBITDA, phenomenal increase in EBITDA. So what gives? Why does the share price continue to languish? So this might be one to consider, that maybe this might just be the start of the turnaround. Maybe some of you in attendance today can let us know what are the reasons, what is holding this one back currently. the financials certainly look pretty strong to me. All right, so with that said, I'm going to throw that one in as well. I'm going to just go and grab all the buy rated ones for now. Okay, I'm going to right click. I'm going to add these to a watch list. So I'm going to put these into a special watch list. I've created this one here, travel and tourism. I'll put it under my watch lists, or actually no, I called it hot topics of interest. Here we go, travel and tourism. That's where I'll put it. Now again, if you take it a trial, it's easy to do. It's fun to do. What I've done there is straightforward. Once you've played around a little bit with VectorVest, you can create your own watch lists. Let's go and have a look at the overall of all those stocks. So if I look at the overall snapshot here, beautiful set of earnings starting to turn around, and we're starting to see that breakout. Now, bearing in mind, EVT, as much as I think this might be the start of the turnaround, and again, I can't give you personal advice. You need to speak to your financial advisor as to whether that's suitable for you. But if I take that one out, because that was one that was dragging it down with the overall trend, all right, you'll see it's a bit stronger here. Here we go. There's the uplift in the earnings. There's the uplift in the growth rate. There's the uplift in sales. All right, I like that. So these are the ones starting to sort of show the way. Let's drill in a bit further. Let's look for any sign of weakness. All right, something that really sort of jumps out where you go, oh yeah, maybe I need to take that out of the portfolio. So we're seeing Qantas, and a little bit, the earnings have softened a bit, but still very good overall. So I'm not too concerned just yet. Corporate travel, we're seeing this nice pop up here now, which is great. Sales are coming up. So that's sales. It's the growth on earnings. I'll just make it jump out a bit more. Let's make that a bit easier to see. All right. So, and there the earnings, good. Hello world, yes, good earnings, but they're only just starting to sort of peak here. Sales have been a bit sort of ho-hum. So I think HLO is your weakness at the moment. Flight Centre, sort of borderline, but we're starting to see that really strong growth rate. I want to see a bit more action on the earnings, but I like the fact that the sales are starting to pick up. So I'll probably let that one slide. AQS, yeah, it's really not jumping out at me. Earnings are quite flat, and growth rate sort of seems to have leveled out. So let's take those two out, AQS and HLO. So we're going to distill them down now. Here we go. So what do we got? 4 in total. These are the 4 that currently jump out. Let's view the watch list. Here we go. And let's pull it back a tad. So there we go. There's sort of COVID sell down. And this is what we're looking at here. Earnings holding steady, growth rate picking up, and a good pop in the sales. And there are the 4 that currently are jumping out. And you can see here, if you go since the start of the year, let's go to the start of 23. So I'll come to the start of 23. Let's see how they've performed. Start of 23, 3rd of January. We've got this powerful tool called Quick Test, just tests from point to point. 2 of those were sell rated at the start of the year, so you can see how they've really turned things around. And here they are. So Flight Centre up 31, Corporate Travel 30, Webjet 17, and Qantas at 14%. So a combined average total there of 23 odd % since the start of the year. So these are the ones leading the pack at the moment. Let us know in the chat box there, what do you think? Are those ones that are currently jumping at you at the moment? For you, do you know of any travel and tourism stocks that are doing well at the moment? Share it with us. But there are the ones jumping out. Okay. Another bit of interesting information I'll leave you there with, and this is Qantas and Jetstar discount more than 1 million seats. This was just the other day, 23rd of February this year, 2023. So just the other week, Qantas and Jetstar are making it easier for Australians to lock in their travel plans for the rest of the year, with more than 1 million discounts set up for grabs in their latest network-wide sales. From today, so that was as of 23, I think it's still going, one-way fares are available from $39 on Jetstar, $99 on Qantas. Business class fares are available from $499 on Qantas. Between Qantas Link and Jetstar, the sales span more than 170 routes around Australia, including capital cities and regional towns from Cairns to Canberra to Ballina and Brisbane. Jetstar is also offering sales fares on more than 20 international routes, with fares starting from $175 one way. All right, so the sales fares are on average 30% lower than Qantas's normal lead-in fare and up to 60% lower for Jetstar. All right, so Qantas Group CEO Alan Joyce said the sales would help travellers plan ahead for their next holiday or business trip. We're seeing really strong demand as Australians continue to put travel at the top of their shopping list. We've been adding new routes to help meet the demand, especially to leisure destinations, and we've put a lot of sales into the market. Okay, so coming back to Qantas, maybe that's what's being done at the moment, because we've had blast off phase with the earnings here. And the earnings are just, I mean, they're not bad, but they've softened a little bit. So that may very well be that initiative to keep driving the interest, keep the earnings going. But having said that, with an earnings growth rate outlook at a whopping 37%, I certainly don't see any issue right now in terms of the earnings impact on Qantas. Okay, so let's have a look one last time, the overall watch list of those 4 stocks. And look at that, earnings growth rate at a staggering 38%. Earnings there continuing to power higher. Sales continuing to grow. Looks to me like that's the turnaround, as we'd been noting 11 months ago, to get your watch list, get things ready. There was your COVID sell down. Let's have a look here. We'll drill back just a bit. So there's COVID, bang, sell down. And it's been a slow recovery on the earnings as things start to normalize and come back. All right, so here we are in that cycle, and right now it's a pretty strong part of the recovery. So I hope you've enjoyed it. I hope you've enjoyed the previous webcasts as we've covered those, the live streams. If you've missed any of them, don't forget you can go back and you can watch any one of those. They're on the YouTube channel. So let me just bring up the YouTube channel. Bear with me. Let's hop back to YouTube here. Here we go. So if you hop along to VectorVest Australia, so type in VectorVest Australia, you'd need to type in VectorVest Australia to find it quickly. All right, and whoops, typo there. And once you've typed that in, go and find VectorVest Australia, and then if you click on live, all right, so if you click on live, and then from here, this is where you can go and catch up. Okay, so you can go and catch up. We covered the big banks, identifying some of the highest yielding stocks, building a powerful watch list, and you can also check out some of the previous ones here. Of course, this replay will be going in here as well. Okay, so I hope you got a lot out of it. Thanks again for coming along. I'll just transition back here. So thanks again for coming along. Don't forget, we've got another one coming up, so keep a look out for the next one coming up. And we look forward to seeing you there. So you'll see here, I think on the home page here, it'll tell you upcoming. So the upcoming here on the 13th of April, 4 tips to determine when to sell. And that's a very popular one, because one of the most, in fact, sorry, you can't see my screen here. Let's transition across. So all I did is I went to VectorVest Australia, and I then clicked on home, and here, 4 tips to determine when to sell. All right, so on the channel, just go to home, scroll down here, 4 tips to determine when to sell. That's a really popular one, teaching you when to sell. Knowing when to sell is often one of the hardest things to do as an investor. And that's what we address there. We take a non-emotional, powerful way at addressing that. All right, so you know exactly. If you like what you see today, why not consider a trial? Trial at VectorVest, www.vectorvest.com.au/trial, or just simply go to our webpage, vectorvest.com. Let me just bring that up. I'll just type it in here and bring it across. Here we go. So vectorvest.com.au, there it is, risk-free trial. And you can click on the risk-free trial and away you go. It'll load it up. And from there, you can then put in your details and you can trial out VectorVest for 30 days for $9.95 USD. Call it, say, 13 Australian dollars approximately. The other thing I want to also let you know is a trial. You'll get 30 days for $9.95. You'll get invited to a monthly online VectorVest investment gathering. We cover some great topics there, and we get so much out of it as a group. You'll get access to our weekly videos and essays, and access to all our portfolios that we track each day in the VectorVest system. And we've got a few at the moment here that are already starting to fire up, coming to life. The Australian Blue Chip Dividend Pays is up 6% this year so far. The Best AU ETF Supercharged portfolio is up 5%, and Southern Comfort, our smooth trending portfolio there, is up 5%. And what you can do in each one of those portfolios is you can see exactly what stocks are being held each and every day. It's a real time saver to give you some great ideas. All right, so you get access to all that. Feel free to call our product support team. We're open till 1 p.m. Sydney time equivalent today, and then we're open up again tonight. I think it's at 9 o'clock. We stay open all the way through until 1 p.m. Saturday afternoon. 1-800-303-782. That's Australia toll free. Email us. You can email me directly, russellmarkham@vectorvest.com, or if you want to get in touch with our support team, support@vectorvest.com. If you hop along to our webpage, vectorvest.com.au, there's also a live chat button there that you can pop up and talk to one of our team if you prefer as well. Thanks again for coming along. I hope you got a lot out of it, and we look forward to seeing you at the next Hot Topics of Interest. Bye for now.